Okay, so we find ourselves now in working paper 10.10, which is the planning materiality working paper. So firstly, we are dealing with the setup section. In the setup section, you need to decide which set of figures to use in calculating your materiality. So we give you three options. You either can use your opening, prior 1 or prior 2. If you have imported additional information in your working trial balance, you can use, for example, interim or final budget. DraftWorks allows for that. Okay. Something else that we have to do in our setup is we need to decide whether the figures that we've imported should be extrapolated. So let's say, for example, you've received a TB from the client that was only for 10 months. Now you can indicate to DraftWorks, okay, listen, that TB was only for 10 months. And you will see if you look down here, my 215 million revenue has now increased to 258 million. Or let's say we are using a 15-month TB. Just to ensure materiality is in line, we actually need to tone revenue down. So that gives us 172 million. But for today, just for simplicity reasons, I'm going to keep it as 12. So my annual turnover, my annual revenue for this year was 215 million. Okay. Something we also need to do in the setup section is we need to identify what the broad nature of the entity is. So are we dealing with an NPO or an NPC, or are we dealing with a normal profit-oriented company? That's important because that drives my action 3. So which figures to use in determining the materiality basis and then ultimately determining the materiality amount. So profit orientated will give us these possible planning materiality bases, and a non-profit company or organization will give us total revenue and total expenses, for example. Okay, so very important to make this decision in the setup section. Then, of course, we need to provide reasons. So as you all know from our normal colors, that if something is yellow, it's mandatorily completable. So you need to document your reason for the balance is selected and for the nature of entity indicated. It's very important. Now, this is where the audit file can fall over, okay, on your reasoning, your proper documentation of your considerations. Okay, then we get to action 1. So action 1 is where you need to identify the users of the financial statements. A lot of people identify SARS as the main user of financial statements. You are more than welcome to do that, or the CIPC, or let's say any financial institutions. Whoever you feel are the most important users of the financial statements. And if you can think of a comment to provide even more information about that user, you are more than welcome to input that into this field over here. Cool. So based on my selection of my set of figures to use, opening prior 1 and prior 2, my figures will pull in from the TBs. Okay, if for example I select to use final budget, for today I did not import any final budgeted figures, so that will be blank. Okay, so I'm going to keep that as my prior 1 figures. Then we get to action 3. So action 3 is where we need to identify the materiality, so the actual materiality. And this gets done by applying typical percentages to certain materiality bases. Okay, so very important to note which basis would you like to use. You need to understand the nature of the entity, you need to understand the business, you need to understand where the entity actually shows its growth, ultimately to determine the materiality figure. So for today, you will see that we are using these typical percentages, which can be found on discussion paper 6 of 1984, a discussion paper that was issued by IRBA, never made it past being a discussion paper, but at least you know where this percentages comes from. Also, these are the typical percentages that's used in the handbooks that's currently used in varsity, so auditing notes, dynamic auditing, all of those handbooks use these typical percentages. These percentages are also used by IFAC, so we just feel it was the only percentages that we could have a little bit of evidence, a little bit of backbone to it, and that's why we've included it as the percentages you can see on the screen. However, if these percentages are not firm policy, so perhaps your firm uses 1 to 3% of gross profit, then please you will have to change it. This is not an easy change. You need to contact support, please, or email support or call us or whatever is the easiest for you so that we can assist you in amending the percentages ultimately to be in conformity with your firm's policy. The percentages selected to be applied, let's say 2% of gross profit, 6% of net profit, 1% of revenue, 2% of assets, 2% of equity, that's fine. Now we get possible planning materialities, and from here we need to decide what the actual planning materiality should be. So we are guiding you in calculating a few sets of possible planning materiality figures. However, we still put the ball in your court. We still ask you to put the final nail in the coffin and tell us what materiality figure would you like to use in this file. Okay, it's guided, so you can't use a number that's more than the maximum of these figures. So the maximum 2.78 million, for example, if I try to put in 2.8 million, draft is going to throw out a validation error that states that you're not allowed to use that figure. It's not within the possible planning materiality ranges. Okay, so I'm going to keep it as 2 million. That's, in my professional judgment, a materiality figure that will be able to be used throughout the file. It takes into account my risk consideration of the entity as a whole, and I feel that that figure will assist me in identifying material misstatements. Percentage applied 75%. Again, if your firm's policy states it's 80%, you're more than welcome to change that. And then from that, we calculate a performance materiality. 2 million times 80% gives us 1.6 million, which gives us the performance materiality to be used in assessing components. Then, the reasoning again. Please take great care and consideration upon documenting the reason for your materiality used. The figure is only a little bit of the work. The crux, the power of the materiality figure lies within the reason that you document over there. Action 4, you will see, is the only action that we've included in the working paper that has a grouping to be opened and closed. The reason behind that is specific materiality is not a mandatory figure to be calculated. So if you have areas on your financial statements that's of a high risk, for example, and you would like to calculate a lowered materiality in order to test a little bit more on those components, that is what action 4 is for. Okay, so if you want to calculate a specific materiality, that gets done in action 4. Then we get to action 5, which is our clearly trivial threshold, and that gets done by applying whatever percentage you think, so you approve, to the overall materiality, ultimately to calculate your clearly trivial threshold. Okay, and then again, most important thing is the reason behind your calculation. Okay, and that's planning materiality in a nutshell. Very easy, very straightforward. Please remember we do have guidance in these documents as well, so please go read the guidance if you are uncomfortable with anything that you should do on this working paper. Cool.